Alright, I'm going to show you about the MACD strategy. This is literally my 4th time filming this, and I think I got the settings right on my frickin' video recorder. It just corrupts the file every time though, alright? So, what we're going to do is, I'm going to say, so what's good about it, what's bad about it. So let's do that right now. The MACD indicators are, now the MACD strategy is 80% profitable, especially if you use certain SMA and you tune your SMA to the stock that it's on. It works best with Thinkorswim. You can do it on Webull though, and TradingView and Robinhood together. But it works best on Thinkorswim for one reason: they give you indicators when it breaks out. All right. What's bad about it is you catch about 50% of the uptrend waves and about 50% of the downtrend waves if you're trying to short sell. So you make about 50% of the profit that you could have made just doing everything else. Like another good thing about it is it's super simple, so it's easy for basic traders to trade it. And is one of the best ways for basic traders to make money consistently in the market. So what I'm going to do is I'm going to talk about what the heck is going on, what it does, and how to use it in general. All right. So if we go to my screen, this is on Thinkorswim. I'm going to show you how to do it on Webull in a bit. But as you can see, come up here. Oh, shoot. If you come up here, go here, VWAP, moving average exponential 180, turn breakout signals off. Moving average exponential. Shoot. Not these. Wrong ones. Well, that's why. Simple moving average. Okay, gotta tune that to. Just gonna do. I'm so stupid to do that. Alright, 180. Breakout signals, no. Now we're gonna add one more. And we're going to tune that to 15. 15. Yes. Alright. Boom. Alright. MACD. Breakout signals. Yes. RSI breakout signals. Yes. So, as you can see, on the 1 minute chart. Shoot. We're going to change one thing. Going to change, no, we're going to change the color of the 180 day to a blue. Alright, so that's how you set it up. Wait, no. Now, you don't have to do this, but I like to do it. Chart type, the candles, Helsinki Shi, it's just, I like to read it better like that. And then the RSI, turn breakout signals on there, and then there. So your chart should be looking something like this. Oh wait, end of the VWAP. Just turn the VWAP on if you're day trading. So I'm going to show you how to do a day trade and a swing trade. So you're going to want to trade the stock that is above the 180-day SMA. So it works really well with ETFs that have a like TQQ and SQQ. One that goes down and up and they basically cross or whatever. All right. So as you can see, it's below. So TQQ is probably going to go up. All right. So as you can see, what time is it? It's looking pretty good now. So as you can see, it is below 0. I'm just going to show you. Actually, this would have been a pretty good trade. So first, what are we looking for? We are looking for an SMA. So we're looking for an SMA. We have a green candle right here. It goes up and then gets canceled out by the red SMA. But then we have another green SMA. So then we basically say, all right, there's a green SMA here, and it looks like it broke. And then there's a green MACD here. Now we're going to buy on the next candle up, which is right there. So then we're going to hold and wait for, we can either sell in 3 different places. We can sell when the MACD crosses again, which is a pretty decent working strategy. But it does have its downfall for overholding, and you might not get the best buy and sell price. If you are a very, very basic trader and you're just going to want to hold until there's another sell indicator, which is the red, the red arrow that's just pointing down, and then you're going to want to sell in the next candle of that. But if you're looking at a bunch of other indicators, which you could sell if you're like just starting, sell at the top of the RSI when there's a breakout indicator down. So like right here, and right here, and right here. I know there's still stuff up, but if you're just looking for solid good trades, you either will sell here, on here, or up here. All of them work. Or if you're even looking at it better, so there's basically 4 different ways you can sell. Sell on the SMA when it crosses again, which you'll get an arrow. You can sell on the MACD when it crosses again, and you'll get an arrow down. Or you can sell on the RSI at the top of it when you get an arrow down. Or you can sell at resistance. Those are the 4. So resistance is the VWAP. So from this time right here, set a sell order, it's right there. All right, so 114. 113 to 114. If you're just looking for a solid trade, that's what you should do. But if you're looking for maximum profit, go with the SMA. And if you're looking just for the simplest, go for the MACD cross. All right. So as you can see right here, it's looking really good. But we just got a downtrend on it, so it's whatever. Also, the MACD has to cross below 0. So right here, that won't work. Right here, it'll work. Right here, that won't work because it's below the 180-day SMA. But right now, if this crosses right here and we get an uptrend arrow, that's a good buy. All right, so today, pretty much there's only about 1 to 2 good trades a day for using the MACD strategy, especially if you're only using one side of it. So what I mean by one side is right here. So that you wouldn't trade that in SQQ. You wouldn't trade that in TQQ because it's below the 180-day. You wouldn't trade that. You wouldn't trade that because it's still below the 180-day SMA. This would pretty much be the only trade that you'd make right here, unless this pops up and it does another one of those. So it's about only 1 to 2 good trades a day, but you're missing out on a lot of profit because it basically filters a lot of the crap out. Now that's what makes it a really high percentage. That's what makes it a really high percentage just way to trade. Yeah, that's basically just a really high percentage way to trade. So you're only getting in at the best confirmation. But I'm going to show you how to do a swing trade. So that's the both simple ways. So also you're going to want to save this as the day trading. So save, day trade clear, copyright it over it. All right, so now you're going to want to go to the 4-hour chart or any good swing trading chart. Here, I'm just going to turn off my trades really quick. So I'm just going to show you guys some stuff. So first, for the swing trading one, you're going to want to come up here, turn off the VWAP, and then basically keep everything else the same. Then come down here, studies, save study set, swing trade. So I can't type. Swing trade clear because it's a very simple one. Now, if you can see here, we're just going to look for the ones that are above the 180-day. Okay, so right here, this is a very, very good example of one. It's above the 180-day SMA, which is right there. You have a SMA, and then you have a MACD cross. You basically have a break. So then all of a sudden, you'd buy and wait for the next sell, which is right there. So, shoot. How do I turn off after hours, extended hours? Oh, wait. Show orders, show studies. Well, if you can turn off after hours, you don't really need after hours, and it would help out smooth out your trading. But it's essentially the same thing. So buy, sell right there, first downtrend candle, and then you wouldn't buy until it crosses below zero again. So that one didn't cross below zero, so you're missing on a profit there. This one, you would definitely buy, and then you'd sell right there. It's 8% gain right there. You wouldn't do it again until boom, right there. Right there. And if we kept on taking that trade seriously, shoot, that's 20%. All right, long trade. All right, so boom. Oh, man, I didn't even see how much that was. I'm so stupid. 30% gain on that trade. But if you're just going off the SMA, which I would highly suggest you do, um, right there, that breaks below it. Right there, that breaks below it. But that you would basically make nothing on that. Break, sell. So you wouldn't even make money on that. So it misses out a lot of the profits. But when it makes it, it does not really lose that much. So then, all of a sudden, let's think about this for a minute. Let's go and tune. All right, so those are the two simplest ways. Now I'm going to show you. One, you can get way more confirmation, and another way where it's basically a supreme day trading way. So the first one, I'm going to just show you this for supreme day trading way. So let's just turn on the swing trade clear again. So come down here, load study set, swing day trade clear. Now go to the 1 minute chart. All right, so it's essentially the same rules, except if you're going to need more than $25,000 to do this, so you can trade multiple times in a day or a week. So you're basically not going to care about the 180-day SMA. So you can literally just turn it off. Then keep the 15 MA, and actually we're going to tune this a little bit higher to 19. So you have a little bit more confirmation, and you can sell at better prices. All right, so it's essentially the same thing, but it doesn't need the 180-day. You basically would not trade that, and it doesn't matter. And you'd also trade every single break above. So this break right here, you'd buy and sell. That'd be a losing trade. But right here wouldn't, and you would sell there. You wait. There's another break right there. Buy, sell. You wouldn't make anything on that. Buy on that break. Boom, sell on that break. So it's basically essentially the same thing, but you're going to need multiple day trades to do it. All right. That's pretty much how you do it. That's how you do the supreme day trading way. Now I'm going to show you basically the most confirmation swing trading way. So as you can see here, we go to the 4-hour chart. Now we're going to turn on the 180-day SMA. So we're going to go here, swing trade clear. All right, so we're going to add. Shoot, wrong swing trade clear. All right, so what we're going to add is we're going to come up here to here, and we're going to add one more simple moving average. Simple moving average, one more, and that is going to be set for 20. Boom, and show breakout signals. No. So they should look something like this. I know it's a very colorful chart right now, but as you can see, basically below it you would ignore all the trade signals. Right here, that would be your first signal because it's in the middle of them. Then all of a sudden, the next candle, you get a MACD up cross indicator. The next candle, you'd buy. You'd wait for a full candle to be below. Full candle, well, you haven't. Basically, you'd either wait for one or two things. You would wait for a MACD, no, not a MACD cross, a SMA cross, or it to be in between these. So This would not count because it's not fully going through both of them. This one would definitely count, so you'd sell after hours, but this one has a strong downtrend anyways, so you'd probably make 25% around that. But this is the super, super confidence way that you can do it. So look, you wouldn't take that. You would trade that, but then you would trade that because actually no, you wouldn't. You wouldn't trade that at all. Then you get a break above. You wouldn't trade that. You would trade this. Look, there's an up arrow, and then you have an up arrow there, and it's trading above the 180-day SMA. You buy on the next candle. You wouldn't really make much money, but it is a very, very safe way. In fact, this is about 85% profitable if you use this method. It's a combination of the alligator method and the MACD strategy. So, that's how it works. All right. So, those are my ways that you can use the MACD strategy for swing trading, day trading, and just better day trading and better swing trading in general. All right. So, thanks for watching. See you later.